Hi, Andrew Barman here at NEMA 2013 in Warsaw. We've had a very full day already, and we're looking forward to the sessions tomorrow. One of the sessions we're going to be looking at is banks' impacts on the CSD, the banks moving into that space. One of our panelists there will be Andrew Rand, who's at Deutsche Bank. So it gives me great pleasure to welcome you to Andrew to the session for this afternoon. Andrew, I just wanted to see what were your thoughts on banks moving into the CSD space, and how do you see that that's going to impact the shape of the industry?
I think it's very interesting. It wasn't that long ago that the banks were complaining about the CSDs entering into the banking space, and now the coin has been flipped, and now it's the banks going into the CSD space. I see that as a good thing. I think the introduction of additional competition brings a number of benefits to the market. I think probably it will speed up the consolidation process, so it expands quickly, and then it will contract most probably, because the smaller CSDs probably won't be able to compete on the same level as some of these large institutions. I think some of the benefits of that are CSDs are not really known for being terribly innovative, and I think having the global custodian banks come into that space will definitely help the innovation of the space. I think that it also brings to the fore an interesting thought or discussion around risk arbitrage. As it relates to some of the new legislation coming down the pipe, AIFMD for one, UCITS 5. So I think that that's an interesting play. I actually think the model makes sense for them to do that. It'll be interesting to see how it pans out, but I do think that they will bring benefits. Price, again, with competition, usually the prices will come down, which, again, as a user of those services, I would welcome. And again, consolidation, I think it will force some of the smaller banks some of the smaller depositories either to merge or to exit altogether.
So you mentioned pricing going forward with the view of the banks moving to the CSD space. How about banks going forward, and what are going to be the pressures on pricing for the next 12 months between the banking community?
I think there has been a fundamental, I think the industry fundamentally got the pricing model wrong over the last decade. I think that they counted on ancillary revenues for too great a part of their overall picture. And now what we're seeing is the net interest income disappearing, securities lending revenues disappearing, cash management, FX. Volumes have actually gone down somewhat in some of the markets with the French, for example, in France, the French transaction tax saw a sharp decline, or the introduction of that saw a sharp decline in volumes there. And now we're looking at 11 more countries in Europe looking to introduce a financial transaction tax. So we're interested in what impact that will have. But in general, the pricing, I think, is moving in a direction of unbundled. I think that clients should expect to see that unbundling, or users of the system should expect to see that unbundling. They should expect to pay for things that they've gotten for free, or services that they probably took for granted. So the settlement prices will come down, but the ancillary services that have accompanied the traditional custodian or custody product will likely try to make up for some of that, and recognize that. I think, again, settlement costs have been artificially high over the years. That's I think, conventional wisdom, and the asset servicing fees have been quite modest where they should have been higher. Moving the pricing equation up will be a very difficult thing to do in the market, and I think it will take an industry-wide movement. It can't be just one bank, because I think no one wants to be that first bank to increase prices because of the terrible ramifications it could have from a business perspective. So I think as an industry, we just need to get the pricing model right. And I think that it will take a little bit of intestinal fortitude as an industry for us to do that, because we're so accustomed to that downward vortex of pricing. Every so often the clients come after us for better and better pricing. But the final point I have on that is from risk perspective, pricing risk is something that I don't think the industry is very good at, and that we will have to become good at. And so we will be working on that, certainly at Deutsche Bank. We're looking at it now. We're looking at our client base. We're looking at our prospect list. How would we price those given UCITS 5, given AIFMD, and the myriad of other legislation that's out there that increases our overall cost.
I look forward to seeing what we've got to say about this in 12 months, Andrew.
Okay.
Andrew Rand, thank you very much.
Thanks.